Thank you,
Uh,
Sheila.
Thank you so much, Jonathan. Aditutu, please go ahead.
Hi, everyone. Good afternoon. Thanks for inviting me to this panel. My name is Aditutu Tony Dada, and I'm a Treasury and Finance Executive. I've got my background in traditional finance as well as in Web3, and I help businesses who want to transition from Web2 to Web3 and also to support those who have made that decision. Thank you.
Thank you so much for that introduction. Nathaniel, please go ahead.
Hi, good afternoon. My name is Nathaniel. I'm the president of Africa Stablecoin Network. So basically, I lead a network of stablecoin issuers, platforms, exchanges, and stakeholders in Africa. And it's my privilege to be here. Thank you so much, Sheila.
You're welcome. Happy to have you on board too, Nathaniel. Like I said in my brief intro, my name is Sheila Brenda, and I lead media and communications at Yogupay. Yogupay is a cross-border business or company that helps businesses to move money globally without borders. So we do this using various financial solutions and infrastructure, and one of them being stablecoins, and that is why we're having this conversation today. Because in the recent month, especially in September, we have seen how stable coins have gone from just being, a buzzword or an interesting thing to real solutions that that is powering how money is moving globally, how businesses are moving money, how payrolls are being made, digital wallets, and just everything cross-border infrastructure and payments. So that is what we are here today to explore, just to be able to understand what are stable coins, what is this conversation going on around stable coins, is it helpful, why now? And so just to get to understand how we can move it from just a conversation to the pilot projects to even enterprise adoption in Africa. And we have brilliant minds as they introduce themselves. We have Jonathan from Yellow Card, Nathaniel from Africa Stablecoin Network, and we have Adetutu, who is an executive treasury personnel. And I am glad to have all of you here. And so now we will dive right in without wasting any time. And so for this discussion, I had segmented it into various categories so that we, tackle it conclusively without, especially for the main categories that I thought would be very interesting to everyone who has joined today. And the first one that I'll start with is policy and market readiness. And I'm really glad to have Nathaniel here because as we've heard, he's leading the Africa Stablecoin Network, and we'd love to just know from what he's doing and the work he's doing with the African Stablecoin Network, to understand policy around that and see from the events they've had so far or the interactions, how is market readiness? And so, Nathaniel, I think for this, I'll start with you on policy and market readiness. So from the perspective of the Africa Stablecoin Network, what exactly or where exactly are African markets in terms of readiness for stablecoins?
Okay, thank you so much. Can you hear me clearly?
Yes, I can.
Okay, I apologize for any background noise. Okay, so there are three key things that make up the market readiness in this context. Number one are the players, that's the companies like Yogupay. Number two are the regulators. Number three are the consumers, the customers, the businesses. So are the businesses ready to move money with stablecoins? Yes, it's obvious. We're seeing it happen every day. Are the companies ready? Yes. I mean, I was surprised to see a normal Web2 payment company. I checked their homepage and I saw we are stablecoin powered. I said, Nibo, when did you people become stablecoin powered? So the businesses are ready. We see Yogupay in East Africa, we see other countries all around Africa, and the regulators are also ready. As opposed to what we saw with crypto, with regulators nobody understanding it, banning it, unbanning it, stablecoin has really been well accepted. For instance, in Nigeria, we had an event where we had at Africa Stablecoin Network, where we're privileged to have the Director General of the SEC, Dr. Agama in Nigeria speak. and it clearly declared that Nigeria is open for stable coins. I was seeing that with Kenya, with the VAT bill, just that the government wants to collect tax, it's fine. We'll give them their tax. They should just give out licenses. And we're seeing that also happen in Ghana. So I think that we've never had this positive before in Africa. We've never had it this good before that all African regulators are forward thinking, saying we'll give our licenses. South Africa is giving our licenses, Nigeria is giving our licenses, Mauritius is giving our licenses. And we're seeing more licenses coming up, new countries coming up saying we're going to have a sandbox, we're going to engage with you people. I mean, 4 years ago, nobody was engaging with us. So that's a very good progress. Yeah.
Awesome. I think I'll just buttress on that point, or rather add another question on top of what you said, especially the last point on the regulators needing their tax. What are the regulatory building blocks that you believe matter the most currently that can help unlock adoption at scale for stablecoins?
On the part of the regulators, what they care about is buy license, collect tax. Don't tell them I said that. But I mean, that one incentive for governments, that one incentive. Most government say that, so we are going to pay tax. You just become their friend overnight. I don't know how that works, but it's something that always works. So on the part of governments, they want to be able to give out licenses, and they also want only licensed players to be able to play in the market so that they can regulate it, they can call people to order, and they want to get their own taxes. And you have to look at it beyond the stablecoin market. So they are seeing a lot of remote workers in Africa, and they're asking, I'm someone who's living in Nairobi, in Kampala, in Lagos. They're working for a company in the US. They are being paid monthly, but the government is able to take a tax. So in Nigeria, the average tax is between 17 to 25%. Depends on how much you earn. And if that tax, that's for like Nigerians, if the government is able to successfully implement that for remote workers, people are going to be paying over 20% of what they earn. So the government is also looking at these young guys are collecting their salary now through stable coins, through deal, through this. How do we tax that? That one building block from their own ends. Our own building block is we want regulatory clarity. So investors want to be sure that before we push in this kind of money to this market, we need to be sure that the regulatory engagement, the regulatory clarity has reached a certain level. We saw what happened with the issue of Binance from Nigeria that went a bit messy. I mean, we all just want to avoid things like that. So any investor that want to do serious, if you see Token 204 now is currently happening in Singapore. And so many people wish like, I wish we could host such a conference in our country. To host such a conference, your regulatory clarity must have gotten to a certain place that people are willing to commit that amount of resources. So that's just what I'm going to say. I'm going to say it's getting better. And the next 5 years, we're going to see that the market is going to be more riper than we have it today.
Awesome, awesome. Thank you so much for that. That is a good breakdown. I think I still want to remain there for a bit, and I'll loop in Jonathan to this conversation because you work directly, with regulators and also customers in Uganda. There are some things Nathaniel has mentioned in terms of priorities, in terms of regulatory priorities, such as what he said, regulatory clarity. Based on your interaction with customers and regulators in Uganda, are you seeing the same priorities that Nathaniel has mentioned, or is it different, and how different is it? And then also with what Nathaniel has mentioned, how do you see, or where do businesses like Yellowcard and Yogupay here still face the friction in terms of policy and regulation?
Thank you so much, Sheila. Yeah, Nathaniel is definitely right. And maybe what we can say is businesses must definitely prioritize regulatory clarity and engagement. Just as Yellowcard, we work closely with central banks across all the 20 African countries where we are present. We work with the financial intelligence authorities and any other regulatory arm. And this is basically to help us avoid any missteps that may come across as we operate as a business. Because with these missteps, it can be very costly to the business. And as they say, compliance is always cheaper. Yeah. Penalties and everything that may come across that maybe may cost the company much more than its actual investment. Then, of course, businesses should also prioritize consumer protection and education, because you see, just as Yellow Card, we try to have this transparency and create awareness for majority of our consumers. Yeah, we try to be more open. We disclose our pricing, FX spreads, transaction times. This builds confidence and creates business sustainability for us. Yeah. So those are some of the priorities that you can come up with. And as we go ahead and operate within these spaces, just like Yogupay, Yellow Card, there are certain we still face certain friction in some of the aspects of the business environment, and this definitely will include a lot of regularity and regulatory uncertainty, because just like we've seen, there's the licensing pathway is still evolving. Majority of the governments and central banks are just coming up with the regulation and policies for the stable coins. And as experts, Yellow Card as experts in the different emerging markets where we do operate, we've realized that once you create a perfect regulatory environment to foster industry development and protection for stakeholders, that's a way you can overcome the friction of having regulatory uncertainties. And then we also have an friction of interoperability, where we have majority of the clients not being able to send value across the different countries where they operate. And this simply stems from the regional friction, which would be uncertainty and no regulation. So because they don't have that actual policies that actually already exist, it hinders business partnerships that matter, that value, that would be able to enable us create an environment where majority of our clients can easily move value across the different countries where they operate. Because at Yellow Card, we've definitely, where we've been able to have these licenses, we've been able to create sustainable partnerships that enable us to be able to give our clients ease and access for the stablecoin space.
Awesome.
Yeah.
Awesome. Thank you. I think one thing has come up from both your remarks and what Nathaniel had even introduced before in terms of readiness. And I'm still just laying the foundation on, policy and regulation. And it seems as though the market is ready, the providers are ready too, but there's a little bit of friction in terms of the regulators just understanding this product and getting to give the go ahead for for to allow for ease of use across the various jurisdictions. And so I think I just want to add the tutu just for a quick cross check or still on the policy and regulation discussion. And I'd like to hear your points from a Treasury executive's perspective. Do you think regulators are moving fast enough for corporates to feel comfortable in experimenting with stablecoins, especially since one of the challenges with corporates is they want to know that regulators are okay with this product before they start they come in or before they start uptaking the product. Do you think regulators are moving fast enough, regardless of the jurisdiction?
Well, I would say that they are moving, but I believe they are taking their time. And why I would say that is because they would want to understand what they are dipping their foot into. You wouldn't just want to regulate something you don't have an understanding about. And we've seen progress in the sense that the regulators have also come into the market. They've asked operators or corporates to also join them. They've introduced sandboxes. We've seen participants and we've seen better outcomes. Initially, there must have been some sort of fear. We might have led to maybe outright ban. Okay, I don't want banks to deal with crypto, but we've seen that positive feedback from them.
Awesome. So basically what you're saying is, yeah, they would definitely love to take their time so that they understand what they are regulating or what they're okaying before they allow it, right?
Exactly. And they will also look at it from the point of the consumers. There has to be consumer protection. It's a very, very delicate aspect, finance, money. You don't want a case whereby people lose their funds and there is no protection. Just like with the US, we just got regulatory clarity from the US just a couple of months back, where they introduced the Genius Act, the Clarity Act. That was a journey. It took some time. I remember Elizabeth Warren, there was a lot of hate speeches. She's against crypto, she's against that. But look at where we are today. And I believe that with time, in a couple of years' time, this will just exist side by side with the banks. It's not as though we're going to eliminate the banks, but it will coexist. And you'll be doing transactions. You may not even know you're doing it on the blockchain.
Awesome. Thank you for that. I think I'll still remain on you. I want us to go to the practicality of things so that we now come from the theory and just see how practical it is. So I think from your treasury background, let's say a mid-market business wants to pilot a stablecoin for their payroll or maybe even for their supplier payments. And they want to do it maybe through a platform like Yellow Card or Yogupay, right? So what would you say are the first operational steps that they need to take to avoid costly pitfalls?
Yeah, that's a good question. Because anytime I talk about stable coins or I talk about crypto, and I get comments like, Aditya, you're the only one that understands what you're talking about. What are you saying? So there's still that perspective of, I don't even understand what it is. What are you guys doing? And for those that are already in it, I know it took a while before they got to where they are right now. If you're a mid-market business and you want to try out stable coins, you have to define some parameters. First of all, what scope do you want to cover? What are the legal implications? Custody, what are you going to do? So let me just break it down in practical terms. I want to pay some of my employees in stable coins, and maybe because they are all over the world in multiple jurisdictions. You would not maybe like pick October and say, I'm paying everybody in October. You test run with a few people, maybe about 5 people. You test run, you say, okay, I'm going to pay this set of 5 people this month in stable coins. Then you also decide that, okay, if it's going to be supplier payments, I'm going to pick one route. Do I want to just focus on a narrow corridor? I don't want to do it maybe with all my suppliers yet. And where legal comes into place is you will also need to read the fine print. Does the contract state that I am supposed to pay in fiat and nothing else? You don't want someone to ask for euro payment and you send USDC. What happens at the last mile in terms of conversion? How do they off-ramp the USDC? That's that you read the fine print. You also involve legal, because in some jurisdictions, the regulatory clarity is not yet clear. A stablecoin is defined as currencies, other defined as securities, other defined as commodities. You want to be clear on that. Then you also now have to look at, when you want to use these stablecoins, where am I going to keep it? Bank account holds your funds, your Naira, your dollars, your Kenya shillings. Your bank account holds that. You might also have domiciliary accounts. Now, when it comes to custody of the stablecoins, where do you want to keep it? That's a major concern I've also seen, because I've read of a corporate organization, not a small one, and they kept their USDT in a friend or somebody's wallet because they did not know what to do. So you have to take that decision and say that, okay, if I'm going to custody, where am I going to keep those USDC? It's like your digital vault. And what rules are you going to put in place for this custody? First of all, you cannot treat institutional funds the same as your personal funds. Most people here will likely have a MetaMask wallet or maybe a Binance wallet, one of these exchanges. For an institution, you must definitely have at a minimum a multi-sig wallet, meaning that multi people will have to sign for funds to leave the wallet. Maybe 2 or 3, 3 or 5, but it cannot be concentrated with one person. It cannot just be an extension on your browser, because that is death by the browser. The hacking methods are very much sophisticated right now. You can open an email and a PDF document can mess up your entire business. Who is going to hear that story? So you have to also think about the custody. Then the liquidity as well. What kind of rules are you going to put in place in saying, okay, if I'm going to have this threshold of money moving out, who's going to be responsible for it? And definitely you're going to change your policies. And you also want to talk about the governance. You want to talk about the audit. How easily can you reconcile transactions that you sent on chain? So you definitely have to have legal counsel. They definitely need to have compliance as well. So if you're going to use a platform like Yogupay, you're going to ask Yogupay, hey, Yogupay, what's your compliance process like? Do you have inbuilt KYB? Do you have inbuilt AML? Do you have inbuilt OFAC policies such that we're not moving money to a sanctioned entity? Because it's so interesting moving money in seconds, but it's high risk, high reward, high risk for me. So we have to definitely ensure that your scope is defined, legal counsel is carried along, custody, are you able to get your transactions for reconciliation? What are your liquidity rules? What's your governance framework also going to be like?
Wow. Well, that's a lot and very eye-opening. I like the fact that when you began this, you mentioned something on from the consumer's point of view, understanding what stable coins are, and not just in the sense of definition, is really important to consumers. And I like what you've introduced also on people wanting clarity in terms of the scope of stable coins, custody. You've also talked about the cost implication and a couple of other things that you've mentioned. And I think I'd like to add Jonathan to this, to just add on your question and bring in Jonathan on it. And Jonathan, when you onboard SMEs in Uganda or anywhere from the world at Yellow Card, what frictions and fears from the conversations you have with them do you think still hold them back from trying stablecoins, especially considering the fact that Adetutu began mentioning something on them understanding, having a full understanding of the product? And also on that, what can providers do to make the adoption journey smoother for the consumers?
Yeah, what Adetutu said actually is very true. Other frictions or other challenges we usually find with majority of the SMEs. One of them I would like to mention is probably the volatility confusion. See, majority of the people in this space or the SMEs that we do on board, majority of them do not and are unable to distinguish between crypto assets and stable coins. They are not aware that actually these stable coins are one to one with the dollar. For instance, the USDT, one USDT is equal to one US dollar. USDC, one USDC is equal to one US dollar. It's more or less the same. And because they don't understand or are unable to make this distinction, they are unable to utilize the advantages of this, the lower costs and the faster transaction speeds compared to the traditional payment methods. Something else also majority of the SMEs would face is the compliance fears. So just because we don't have the policies fully set out yet in some of the jurisdictions that we operate, there's so many SMEs remain hesitant to adopt stablecoins. And this is partly because they fear attracting unwanted regulatory attention. At the same time, I would also like to thank majority of the central banks that are actually taking proactive steps to establish clear regulations and policies, because this helps to build the consumer confidence. So that fear of just being worried because there's no regulation, what will the central bank say? Because the central bank probably has already issued out certain documentation, certain letters against this space or warn people about it. They just have that fear. So that fear alone pushes most of the SMEs to kind of like deter from the stable coins. And this kind of puts back the whole change that's going on. And then also we have trust gaps in the absence of the clear backing from the central banks on who the genuine market players are. The people, many SMEs, they remain concerned about the reliability of accessing their funds when they're needed. Because you see, if we have proper regulations set out, the central banks would probably come out, just like we've seen it in majority of the jurisdictions. In Uganda, for instance, we shall have the central bank come out and issue a list of verified virtual asset service providers or verified payment service providers. So because there's no, that list does not exist, especially in such in some of the jurisdictions, you're going to have majority of these SMEs not trusting you, because once the government backs you, then they will definitely have trust in you. Yeah. So also maybe, so those are some of the frictions that they will face. So just also to add, how most of the providers, and for instance, Yellow Card, and how we operate in the different jurisdictions, how we can help to smoothen the adoption of stable coins. One of them would be education campaigns. So education campaigns, like for instance, at Yellow Card, we recently released our third report of the year, which is stablecoin adoption in emerging markets. This 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 report, it showcases the practical business use cases. For example, at Yellow Card, we have a number of importers where we have across Africa that are leveraging stable coins like the USDT and USDC to settle some of their suppliers in China in a timely manner, very cost effective, and they've been able to harness the advantages of stable coins. So this not only reduces the transaction costs or the speed, but it also strengthens the overall business operational efficiency. Yeah, so educational campaigns that majority of the service providers can bring out and issue out these reports, it's very important, just like we do it at Yellow Card. Then also guaranteeing easy off-ramps to local currencies and vice versa. This requires strong business partnerships. So for us to be able to give the users or the SMEs confidence, you have to build very strong business partnerships with majority of the entity of the other players or stakeholders within the market. This building these on and off ramp networks ensures accessibility, reliability, which in turn boosts consumer confidence and adoption of the stable coins. Then something else that providers can do is they can provide transparent fee structures, because you see, so most of the times we will come out and tell majority of the SMEs and our consumers that, hey, you know what, utilizing stable coins USDT is much cheaper than utilizing the traditional means, but we don't put it out there and make and give a transparent image to the users. So service providers should ensure full transparency in their fee structures, clearly disclosing the transaction costs. And since clients are highly sensitive to hidden charges, a lack of clarity can deter them, and it will undermine the trust in the service. So they will move away from that. Yeah.
Sorry.
Sorry, you're on mute.
Yeah. Thank you so much for that breakdown, Jonathan. That was well explained. I like what you have said about the problems, and I'll just repeat some of the ones that I think have stood out for me. You've mentioned volatility, confusion being part of, the fears that are holding SMEs back from onboarding on stable coins. You've mentioned compliance. You've also mentioned reliability of accessing funds, when needed. So as the main fears that are still holding businesses back. So I'll bring back Nathaniel here. We want to look beyond corporates. We want to look beyond enterprise, right? Stable coins are already being used, informally by either freelancers, like Jonathan mentioned earlier, by traders, and even diaspora families where they're remitting money to their families, right? So how can these grassroots who are already using stable coins informally, how can these use cases, inform mainstream adoption for stable coins?
Yeah, well done, Jonathan. Well done, Tutu. Like what Tutu was saying, that for corporates to use stablecoins, first of all, they need multi-sig wallets, not wallet in your browser, like MetaMask extension. We need to start building solutions that people don't get to understand stablecoins, but they're using stablecoins. So we need to build a better UX on top of it. Such that all people care about is that I deposit funds if I'm in South Africa. and I'm able to send, or if I'm in Kenya, I deposit MTN mobile money and I'm able to pay someone in Nigeria or pay someone in Egypt. That's all they care about. How we are going to do the settlement, they don't care about it. When I drive a car, I don't understand combustion or any of those things. I mean, but I drive a car. To fly a plane, I mean, to get into a plane, just know when are we leaving, when are we taking down, when can I sit down, when can I stand up. So we need to build our UX to that point whereby we can really onboard everybody and people can enjoy a better experience without necessarily being technical.
Thank you so much, Nathaniel. I've just remembered we were with you at some conference sometime earlier this year, where the main point of discussion was how adoption can be pushed to the mass markets. And one of the things that really stood out was we need to stop communicating tech and actually communicating solutions that are solving, real problems that people are going through in terms of finances through the solutions that we are building with our products like stablecoins, what we are talking about today. So that is a very good addition to what you to that. I think I want now to move towards just because we've already laid the foundation for policy. I want us to go deeper into treasury. We want to talk about risk and compliance, and I think Jonathan really introduced this really well when he said when he talked about the fears that SMEs have in terms of onboarding with stablecoins. And I'll start with you, Adetutu. You've led treasury desks, not just in banks, but also in global, crypto institutions. And I think you'd agree with me when I say that stablecoins are often pitched as a way to optimize liquidity for businesses and reduce FX risk, right? So how do they actually change treasury workflows for businesses? And what governance controls do you think treasuries or providers need to put in place from day one to ensure while we are pushing these products to people, we have everything figured out in the back end?
Okay. First of all, what I would say is that when you use stable coins, money moves in seconds. It's really fast. It's in seconds, yeah. And it's not, you can't reverse it. If you make a wrong payment using a bank wire, you can talk to your bank and you initiate a recall. But stable coins, it's not the same. And it does not eliminate FX risk. What I would say is that it just compresses that time frame, because if you move dollars and someone else is receiving maybe Swiss franc in another country, that timing difference between when you moved and when the person received, it can be significant if the volume is a lot.
Yeah.
And does not eliminate that risk or FX conversion. It just ensures that if I move it now in seconds or maybe in a matter of minutes or hours, we can easily close out that transaction.
Yeah.
Now, instead of managing multiple currency balances, because one of the crypto companies I worked with, I was managing about maybe 6 currencies, 6 bank accounts in different jurisdictions. And it was always, in fact, my financial model was like crazy. And with the use of stable coins, it just kind of compacts that oversight, the visibility that you have. And the kind of things that changes is in terms of maybe your bank movement, when you want to move money, you now think about security. Multi-sig wallet is in place. You talk about compliance. The compliance for you is done by the banks. There was a time I wanted to move money from London to Dubai, and the funds were rejected because at that time, Dubai was on that FATF list and there was some restriction, so the money couldn't. But right now, the compliance lies with you. You have to do your homework. So in that, in those terms now, it means that if you're using Yogupay, you have to ensure that those sanction checks, they are automated. It's not something that you do after the business has been done. Then your internal controls also change. In terms of roles, who approves what, the spending limits also changes. For bank accounts, it could be much easier in terms of some internet banking accounts that you have. There are some workflows in place in terms of approval. But for stablecoins, you have to put that workflow in place. So it means that the person initiating the stablecoin purchase cannot be the same person approving the wallet transfer.
Oh, yeah.
The person with custody access cannot be the same person reconciling transactions. And in terms of incidents, when they occur, what do you do? What's your response like? How do you respond? I remember in 2023 or so, yeah, when the SVP case happened, that's that affected USDC, and there was a DPEG. I was sleeping on a Saturday morning, and one of my co-founders he sends a voice note, 2222. Have you seen USDC? It's less than 0.9, 0.8 or so. So at that point in time, who is responsible for those communications? What do you do? When you're sending dollar is dollar, euro is euro, you understand? But you're holding something that there's a risk of that DPEG. What do you do? Would you want to have an alert trigger in place? Who's going to be responsible for the communication? What if there's an outage? What if there's a hack? We don't pray for that. What do you do? And in terms of financial reporting, your transaction records, man, that is another, it has another issue. You're sending maybe $50 from one wallet to another wallet, and your record is showing some funny numbers, 0xxxx transaction hash. You're like, what is this? I sent money from Tutu to Sheila. It doesn't say it's from Tutu. It doesn't say it's to Sheila. So how do you want to ensure that the UX, just like Nathaniel was saying, you have to be able to create that UX, that layer that helps to eliminate all those complexities, that ensures that the transaction records, they are visible, they are clear, and the daily reconciliation is also easily done. Because if I ask anyone on this call, could you tell me how much you spent maybe last week in September? Even myself, I can't tell you that I can remember. So if you don't have that infrastructure in place to enable you to do your transactions, your reconciliations as transactions are being done on a daily basis, then it's an issue. So the governance framework you have to ensure that you're putting in place is your security, your compliance, your internal control, segregation of duties, and also changes how things are being done.
Nice. Thank you so much for being very real about about even your own personal experience in terms of moving, money across different values on stable coins. I think there's something that you said, and I'd like to hear what Nathaniel thinks about it. You mentioned something on sanction checks and the security bit of, transactions. And I'd like to just get your perspective, Nathaniel, from a policy angle. Many regulators, if not all, always cite, AML and travel rule compliance as some of the key concerns when it comes to the use of stable coins or crypto or digital assets, So how can networks now, like the Africa Stablecoin Network, and I like the job that you guys are doing in bringing together different policy shapers, providers, just to have these conversations and be able to, forward the conversations we are having around stablecoins across. So how do you make sure as a network, that you collaborate with providers, to create, for example, providers like YellowCard, providers like Yogupay? How do you ensure that through collaboration, you are able to create frameworks that balance compliance and innovation so that we are not just innovating only to be barred by compliance at the end of the day?
Yeah, this is both an interesting and an exciting question. So if you look at the banks, for instance, the banks share a lot of data. So they can easily blacklist bad users and all of that. But when it comes to our own space, we seem to assume that players seem to assume that they're competitors. And because of that, so you see a set of scammers doing the same scam from one exchange to another. You see a set of hackers moving from one place to another. Because when they came here, nobody disclosed, nobody saw. So people just, buried. And the same people are targeting like the same company. They move from here to here, and all of these kind of funny things happen. So we need to be able to share data more effectively, because it's when we can see what are the challenges Yogupay is having, what are the challenges YellowCard is having, what are the challenges this other startup is having. How do we think of solutions at a level that works? right? Because with crypto, someone can move stolen money, bad money, dirty money from Kenya to Nigeria to Uganda in 5 minutes. So how do you build a compliance framework that goes around everywhere, right? And one of the very good things is thanks to big players like SumSub, Chainalysis, they are helping to come up to be able to offer some sort of KYT, KYC, AML technologies that's being used by players across the world. And due to that, they're able to gather data, gather intelligence to build better products. But again, it's why we are having these conversations. There are people that feel, why do people do webinars every day? Why are you doing conferences every day? Do you have an idea how many banking conferences hold every week in Africa?
Yeah.
Because there has to be sharing of ideas, there has to be sharing of perspective, there has to be intellectual discourse, right? Innovation follows research, wealth follows policy. Literature has to go first for people to have innovation, right? And which is what we're doing here, and which is why this meeting is very important. And I'm grateful to Yogupay for putting this up.
Thank you so much. Thank you so much for the perspective you have brought. You said with the banks or legacy systems, there's more transparency and data in terms of the transactions and people the transactions they handle. And you said the downside to that in this side is there's lots of competition and not collaboration in terms of there is no openness in terms of how we're sharing data. So I think I would like to bring Jonathan in. Jonathan, I hope I won't be putting you on the spot on this one. But I just to do a quick cross panel for you on what Nathaniel has introduced in terms of the compliance frameworks, in terms of the transparency in data sharing between the providers for, stablecoins and digital currencies. For example, at Yellow Card, are there any operational controls that you insist on before trusting any amount in stablecoin corridors? And for example, I'll mention for Yogupay, I know we have maker checker approvals in place. We have KYT, and we do regular, liquidity audits. So on Yellow Card side, will you just shed light on how you manage that to ensure that you have some operational controls put in place or compliance frameworks, like Nathaniel said it, put in place before trusting any volume of amounts in any stablecoin corridor?
Yeah, thank you so much, Sheila. Yeah, so just as Yogupay, at Yellow Card, we also ensure to have initiator approval or maker check approval controls, whereby we have not one single person who can approve or execute a big transaction, like you mentioned, probably like moving 100 million from Dubai to Uganda, or from China to Kenya, Tanzania, Nigeria. So just to ensure that we don't have that one person will definitely go ahead and initiate this transaction. Someone else is going to is going to approve this transaction, and you'll have probably someone else also reviewing these transactions. Yeah, and this is very important because it prevents fraud and mistakes within the institution. So that is something that we are very key on when it comes to transactions when it in Yellow Card. Then just then know your transactions with the ongoing AML, anti-money laundering monitoring as well. Yellow Card as an institution, we ensure that we do screening for each transaction in real time for suspicious patterns. And this will definitely help us in safeguarding ourselves from money laundering, terrorism, financing, sanction violations. For instance, you can have someone who's usually been moving, let's say a trader who has business in Uganda or Kenya, and they probably have products in Dubai that they buy, and they usually send money to and fro. And you're having this person probably move about, let's say, 10,000 US dollars on a weekly or monthly basis. And then all of a sudden there's a spike. This person is moving 500,000 US dollars. That is a difference of about 490,000 US dollars.
Yeah.
That is quite a sum of money, and they're moving this through the same corridor. So you see, what this definitely triggers us. There are alarms to this. Is there a change in business operations? Yeah. So these transactions will definitely be flagged and they will be reviewed, because this is actually what the regulators expect of us. They expect us to protect our business from being a channel for illicit flows. Yeah. So we also go ahead and have the liquidity audits or the proof of reserves with independent auditors. Yeah. This helps to verify if the company actually has the funds it claims to have to back customer balances. You're not going to have probably a number of clients with holding wallets with you, and they have, let's say, $1 million, but you cannot. When it comes to the liquidity audits, this money does not exist. This ensures that you can always honor withdrawals, and you're not just operating on empty promises for clients. Yeah. Then also for the smooth to have it smooth, you also have to have contingency planning as well, redundancy in banking and payment partners. Yeah, this is also to avoid service disruption, especially for the main off ramp and on ramp for partners. Let's say in Dubai, if or China, if the accounts are frozen, uh, you need a second partner to keep this customer flows moving, and this fosters reliability for the business, and it helps to keep the customers happy as well.
Thank you so much. Thank you so much for that. I see Nathaniel has somewhere else to be. So I think I'll just ask him to give us a last response to a question I had before we can let him go. So Nathaniel, from a policy view, what's one regulatory step that could unlock immediate adoption or faster adoption for stablecoins?
Okay, permit me to answer this without turning on my video. Apologies. More
Okay.
licenses, give licenses, give licenses. Licenses show that the government believes in this industry. Licenses show that you won't wake up tomorrow and ban stable coins. Licenses show that if Yogupay has a license, they can really raise more funding. It shows international partners that, see, these guys are regulated, these guys are serious. Give more licenses. That's what I'm going to say. Thank you very much. It's a privilege being here. Thank you, Yogupay. God bless you.
Thank you so much, Nathaniel. He has to be in another meeting, so we will finish up with Jonathan and Adetutu. I think I will open up the floor to a few questions, 3 maximum, and then we will wrap up our meeting today. If anyone has any question, please either raise your hand or drop it in the chat box, and then we'll be able to address it before we wrap up our webinar today. Yes, Chibugom. I really hope I've please go ahead. I really hope I've done justice to your name.
Yeah, hi, you did. Sorry, I can't remember. I don't think I say your name anywhere to pronounce your name.
It's Sheila.
Oh, hi, Sheila.
Hi.
Yeah, very good conversations going on here. A question I want to ask to the guest speakers would be, sincerely speaking, I'm being very practical and very realistic. How compliant are the fintechs dealing with stable coins? How really compliant are they? I mean, it's okay to just, say they are compliant with all of the security, regulatory, limited boundaries and all of the controls that they've put all of that in place. I mean, there are stakeholders, there are shareholders, and they have to all make everything look good, really.
Yeah.
But if they're really asked, really and truly, how rounded, how clean is their room when it comes to, the safeguarding of and controls and compliance around stable coins, what would their answer be? And at the back of that, I think that that might actually really be the reason why regulation around stable coins hasn't gone further than it is currently. I was privileged to hear some of the comments you made around the fears that the regulators have, and then some other person who just stepped out did say that if he's asked to, say one last thing, it's going to be go ahead and give licenses. I don't totally agree with that. I don't agree that licenses should be issued, just like that.
Mm-hmm.
If really, and I mean, yes, there are challenges, but at the end of the day, some accounting standard will say it's better you overestimate your expenses than, over, I don't know, now I'm not saying it literally, being too optimistic, overshooting your income or whatever. And I think that's where the regulators are coming from. They're probably seeing the chaos that would happen should a single tiny mistake, something go wrong. Okay. And then clearly you said a bit about that. Truth is that if something goes wrong, it's going to be it's going to cut across the entire space. Now I don't know, my words are not put together. I'm trying to use the right term or buzzword we use for all of this. And I think that that's the reason why regulators have not, really come forward to put their head in the game to make sure that all of the monies and the opportunities and the potentials therein is harnessed as quickly as possible to, boost the economy and, make things really go as fast as they should. I don't know if I made sense. That's just quite a number of questions, but I think that's really where the problem is.
Thank you.
If really these companies can be, if organizations and startups can be very sincere to themselves. And then, sorry, one more thing. Is enough to say, based on customers' patterns of fraud and all of that, they've put controls and certain things in place. Let's not forget that the fraudsters oftentimes are smarter, they outsmart, the organizations or whoever, the control person. One thing I heard, I don't know who mentioned, is how that, or a first time might decide to, you check the pattern of transactions. If they've been dealing with a certain threshold or amount of money, they might just decide to, increase it. But how about that? They don't increase it. They just keep doing it, create more accounts. How about that? They're just different avenues. And if companies focus on the normal ones or where they think that nuances could come out from and they keep watching it, chances are that things are going on, in other ways. And I think that auditing the liquidity, auditing the infrastructure should be more frequent than it is currently getting. It shouldn't even be left till end of month. If possible, the auditing of the compliance, security, and controls around stablecoins should be done as frequent as 1 week, maybe on a daily basis. It should actually really be done more frequently. Yeah.
Thank you so much for your question and your thoughts. I think, Jonathan, will you be able to address this for us? What she's basically asking is, sincerely speaking, how truly compliant are the fintechs who are providing these solutions that we're talking about, like stablecoins? And secondly, she mentioned about, I think I'll call it calculated fraud, where while we are waiting to see the figures skyrocket to, amounts that are normally not the norm, how about those that already know that can be flagged and now they're calculating how they will just maintain the same amounts, but with very many accounts, like she asked? Jonathan?
Yes, thank you so much. Yeah. So I can start with how compliant are fintechs. Yellow Card is highly compliant. That is assured. Yellow Card across all the jurisdictions where we operate, for instance, in Uganda, as the country manager, we ensure that Yellow Card has engaged with regulators at all points of the business and the industry. We do have for example, in Uganda, where we're just having the regulation just being set up, we do have engagements with the central banks. We do have actual members of Yellow Card on the teams with the technical working groups of the central banks that are putting up the regulations. So we are not just compliant, we work together to both educate some of the regulators on certain aspects of the business. We work together on the different aspects when it comes to regulators like the central banks, when it comes to data protection, because as we also take into consideration data that we collect for our clients during our KYCs. We work closely with tax entities. Yeah. We also work closely because there's that tax aspect of the business as well. So it's an all-round compliant system. That is one way we try to ensure and we try to engage with majority of the regulators at all fronts of the business. Then also when it comes to the calculated fraud that she mentioned, we do understand that there is calculated fraud. And when I mentioned the change in volumes, it was just to give you a picture of some of the things. If we were to sit down and discuss the ways we do go about to curb this calculated fraud, one, even just having a wallet, let's say with yellow card. When you open up a wallet, you're going to have, there's going to be so much KYC that is going to be done. And even with this KYC, we still have tiers and limits, whereby when you onboard and you provide, let's say, just an ID, a national ID or a passport, your limits are going to be very limited. In that you're going to have a monthly limit, and you're not going to be able to send funds. It would probably take you 100 years to send 10,000 US dollars because of the limits. So for every limit and need you may require to set out and increase your limits as well, we will go ahead and ask you for more KYC details. And this is also in line with the regulators and what they do put up and what they expect from us. So it's quite a number of things that we do take into considerations when it comes to fraud. Because just like to Tony said, you can move 100 million in 5 seconds. So it's quite a big it's quite a lot that we do take into consideration when it comes to fraud.
Thank you for that. Thank you for that. I think I would say the same
Sorry, can I
applies. Okay, yes, please go ahead.
Yes, Jonathan has said a lot, and I know that if time permits, it will definitely say more, because when it comes to compliance and ensuring that you follow these compliance rules, it's expensive not to follow it. And he has mentioned a lot of things. Another thing I would just like to add is that when the FTX issue occurred, so many things, so many gaps were revealed. And because of that, regulation improved. And I would say that something that changed between that time and now is that you see exchanges, they issue proof of reserves maybe every quarter. They show you that, okay, the money I say I truly have, it's actually somewhere and it's audited. And when we talk about fraud as well, most times when these policies, when these frameworks are put in place, maybe because of some operational error, operational gap, there's a loophole, then maybe we can have issues like this. But if you have laid down that framework and everyone follows that framework, then you can at least say, okay, I've protected myself, and anything that maybe happens is something outside our control, maybe like an internet attack or something like that. But compliance, it's cheaper to take that compliance route than not to. And although some fintechs may just be having it at different stages in terms of yellow card, their reputation is far and wide in terms of they've gone far ahead. And like Jonathan said, they're also working with regulators. A new fintech may not get to the same level with yellow card, but definitely they will mature as they progress.
Thank you so much. Thank you. I think those insights from both of you are very rich, and I don't want to water them down or even add anything. I'll just echo what both of you have said, and I hope, where is she? I hope she has. Are you? I can't remember her name. Oh my God. I hope
Yeah,
you.
yeah. It's very impressive hearing that Yellow Card has such a rounded and robust collaboration. But sorry, I know you're running short of time. If I may just add one more thing, for Yellow Card, maybe if they don't even have it already in existence, I would suggest that both for the regulators and for the fintechs, that it creates I don't know, a subset in the compliance unit that will deal with intelligence, trying to keep researching on different patterns of fraud that could come out, especially as relates to stablecoins. Is that big a task to create a desk for it? So on a regular basis, keep researching, keep trying to poke intelligence. And I mean, that's why FBI and the rest of, certain arms of sects exist. If they could do that, like Tutu said, it's quite expensive to have. Both infrastructures are expensive.
Yeah.
The cost of non-compliance is also really expensive. It's just a matter of choosing which of them you want to go for. But of course, infrastructure and controls.
Thank you. Thank you so much. I think if you have any other question, please just drop it in the chat. I will compile all of the questions because of time, and we'll try to answer them after the webinar. We'll still be in touch with Jonathan, with Nathaniel, with Adetutu to ensure that all your questions are answered, and you will receive all the answers to your questions in your inboxes at the end of the webinar or early next week. I think just to wrap this up, I think stablecoins are we've been serious all through this conversation, and I feel like we need to, close on quite an easy way. I've just remembered a fun question, and I think this will be the last one even before we conclude. For both now Adetutu and Jonathan, what is the biggest myth about stablecoins that you have had and you wish business leaders would unlearn today? Jonathan, are you willing to go first?
Yeah, I can go first. So if I'm to understand correctly, you're asking for the biggest myth about stablecoins.
Mm-hmm.
So one of the biggest myths I've had about stablecoins, majority of the users have talked about, is sometimes it's to do with the volatility. Like, it is possible to get rich investing in stable coins, and people look at it more of as an investment. Yeah, but also, just to clarify, it is advantageous when you have for example, how you invest in the US dollar, and you, let's say, you get from the local currencies, and you buy, let's say, US dollars, and then you hold it. It does give you value. It does give you value. So people who always say that cryptocurrencies or stable coins is just another scam like the cryptocurrencies, it's not actually true, because actually it can safeguard you against inflation, if I may say it that way. Yeah.
Okay, thank you. Adetutu, what's the biggest myth you've had, and how will the business leaders or everyone unlearn?
Well, it's just something similar to what Jonathan has said in terms of, you see people saying, okay, I've invested in USDT, but really it's just like the dollar. But something I will also add to it is it's not really a myth. It's supposed to be the reality, because what's the concept of stable coins? It's backed by the fiat currency. So that means one USD stable coin is equal to $1. But like I had mentioned earlier, there was a time that USDC depegged because their reserves or their fiat currencies were with the bank that collapsed, the bank institution that collapsed. So which is why, even though we believe it's always one-to-one, we should always have it at the back of our mind that it could possibly change, the dynamics could change one day, and what are we going to do in response to that incident? Well, something I just like to add is outside the scope of this is that now businesses can also issue their own stable coins. So we're going to have a flood of stable coins in the market. So one has to also be very careful about what kind of stable coins you want to hold as an institution, as a business.
Oh, wow. Thank you. Thank you so much. I think I'd just like to note, we were supposed to have 4 panelists today, but Abraham from AutoSpend got an emergency a few hours before the webinar, and so he sent his apologies. I think we will have him next time. Allow me to say thank you so much to you, Adetutu, to Jonathan, and even Nathaniel in absentia. For such a rich and forward-looking conversation that we've had. You've poured your hearts into this discussion. You've given us your knowledge. You've shared even practical examples. So I want to say thank you so much for coming on board and opening up stablecoins and their adoption and use cases to us even more. I want also to thank everyone who's joined, our audience. Thank you so much for joining. Thank you so much for engaging. Thank you for the questions. Thank you for being here. We are so glad that you joined. And unless Adetutu and Jonathan have any last thing to say before I conclude.
Yeah, maybe what I can say, especially to the rest of the businesses out there, like the only way you get to learn more about stable coins is actually, if, like they say, the only way you learn how to swim is actually to get into the water and jump in. So the best way, like, instead of having so many doing so much research, and you're trying, because there's so much information and some of it is not true, I feel like it's better for SMEs maybe probably jump in. If you have invoice settlements, let's say in China, walk up to your local, let them know, hey, I need to settle a client in China. How can we do it? And then that way you learn more about stable coins. You learn because there's the practical usability, there's a practical case for it. Yeah, so let businesses jump in, get into the water and swim. You get to learn more when you're actually in the business than when you are just doing research about it and hearing what other people have to say.
Wow, thank you so much. Adetutu?
Same thing for me. It goes back to the first question or the second question that you asked. You want to do a transaction, what do you do? Just do a test, run a test, pick your target. Do you want to do sample payroll? Because there was a company I joined, a crypto company, and we're still paying in local currency, maybe Kenya shillings, naira. Like, look, yeah, crypto company, you need to pay your staff in crypto. So that's extra. So even if it's that you want to send money to somebody, try it out. Open an account with maybe Yellow Card, with Yogupay, take that test transaction, measure the results, check out the costs, check out the speed. Just keep it small. And it's not as though you're going to invest in a crypto asset like Bitcoin or Ethereum, where you are exposed to a greater degree of risk of losing your money. It's not that you can't lose your money with stable coins, but just take that leap of faith. I have some of my friends who are like, they're on this call and they see me do these things every day, but they're like, nah, 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 nah. So just take that leap of faith. And this is maybe like call out. Just try it.
Awesome, awesome. Thank you so much. I think I'll finish by saying at Yogupay, we believe that stable coins are not just the future, they're here now. And they're already reshaping how African businesses are trading, how they're paying, and how they're growing even across borders. So that will be it for the webinar today. If you have any more questions, any more discussions, if you need the recording for the webinar that we've just had, or any more resources, please feel free to reach out to me, sheila@yogupay.com, and we will be able to provide you the materials that you need as regards this webinar. And I'll finish by saying this is just the beginning of the conversation. So stay connected with us. I'm sure even Yellow Card, Jonathan, Yellow Card is also, like he said, doing some educational campaigns to ensure that we are also educating the masses so that stablecoin adoption is moved by trust and understanding. So thank you so much. Stay connected with us. Feel free to follow us at Yogupay on all channels or Yellow Card on all channels. And until next time, thank you so much. See you during our next session. Bye, everyone, and have a lovely evening.
All right.
Bye.
Thank you,
Thank you so much, Yogupay.
Bye.
Thank you, Shane.
Bye.
Thank you.